Hey everyone, I'm Jeremy Szafron. This is Kitco News. Don't forget to hit that subscribe button for the latest. Now today on the show, we'll unpack the market's response to the recent economic signals, specifically the unexpected rise in jobless claims to their highest levels since August of last year. Now this has stoked speculation about the potential Federal Reserve rate cuts in 2024. Short-term Treasury yields are outperforming, indicating a shift in monetary policy here. So when does the Fed cut and what does this mean for our investments? Joining us to break it down is no stranger to the Kitco audience, E.B. Tucker, a well-known financial analyst and the editor of the Tucker Letter. Thanks for joining us today, E.B.
Thanks for having me.
I appreciate your time. I mean, there's lots to unpack. The last time I saw you, I think you were on the West Coast. You were in Vancouver as VRIC. Prices of gold hadn't yet reached all-time highs. Tell me about what's been going on with you since then.
Well, I've been playing a lot of tennis, but I mean, as far as the market, as far as the markets go, gold's up. Let's just go back to October. I mean, gold was at a pretty tough spot then. It's up 26%. I mean, that's a huge rise. I mean, it's a massive rise, and the mining stocks haven't moved. And so I think people are having a hard time understanding what's going on here because you've got, Newmont and Barrick are up about half of what gold is up since October. I mean, Agnico's up the most, so that's kind of like your outperformer. But most of the stocks haven't moved, and the question is, why buy a mining stock when you could just buy gold? Now, I'm not saying like that's not really like the action to take, but what I'm saying is it's a question to say. Well, the argument from the gold bugs was always the mining stocks give you operating leverage to the rising gold price, but some of the stocks are actually down. I mean, some of the smaller stocks are like way down. And you're just like, why would I lose 20% in these speculative stocks that have all kinds of market risk and credit risk and all this stuff? And let's talk in a little bit about management risk, because these people are way overpaid. And in my recent letter, I put up a clip where Bristow at Barrick is trying to get rid of in-person. These people want to get rid of annual meetings forever. Because I mean, if they could, like the U.S. Congress has, like spiral barbed wire around it, so no one can get near the congressman. And that's like what management wants, is they don't want any shareholders anywhere near the place. It's like they basically think we own this. This is our business. The shareholders are a big inconvenience. But my point is, as shareholders, you have to ask those questions. Why are you getting paid so much money to underperform gold? Your whole argument was that you rise more than gold. That was your entire investment thesis. And you're actually going less. And we can talk about this later. But I mean, I think there's a productive conversation to have there. It's not like you're just giving them a hard time, but I think if people don't vote, you have all these proxies coming in the mail, you should vote look at the stock chart. If these people underperform gold, you can vote and you can send a message, and it's not just like to mess with them. It's to say like, what's your plan? If your plan is just wait around until your stock goes up, that's a really bad plan. Like if you're an investor, like why would you own that stock? And our investment thesis is, eventually it'll rise. I mean, probably not. I mean, it eventually will go down because they have to keep selling stock to pay themselves and, do fun things with the corporate treasury. But the deal is that when people look at the sector, mostly like they don't understand what they're doing because they want something that's going to fly up and have like a discovery and some life-changing gain. It's kind of ridiculous if you think about it. I mean, there's tons of stocks. Most of them are way down. They've been down for 10, 15 years. And I think it's time to like take your head out of the clouds and think like, what are you really doing? There is something to do here, but like, what are you going to do about it?
Yeah, no, that was a great tease. In fact, it's going to make all of our audience wait to watch this a little bit longer, because I'm going to get into those equities in a moment and those opportunities with you, really understanding this whole corporate governance side and what activism means in terms of some of these. But before we do that, let's talk a little bit just about the economic data that we just received. Obviously, the latest labor data report showed an initial unemployment claims at 231,000 last week. Now, that's the highest since last October. We've seen what the Fed's been putting out with data. We're seeing a little bit of a slowdown here, a little bit of a cooling happening in the markets, the economy rather. So I'm curious, how does the indicators of this potential labor market slowdown, how does it align with your views on the Fed's monetary policy? Where are we going here this year?
Yeah, so in America, you have to really be careful because you got to get all the narratives right. So we want a lot of people to become unemployed. We want that. because we want more Fed money. And we also want our house to go up in value. I actually don't, because I think it's irrelevant. But
Right.
we want our stocks to go up in value. But we want people to be in soup lines, in the economy. So we're very confused, and I think people, it's day to day, right? So I've written at length about the Fed is the most sophisticated PR machine in the world. I mean, it's constantly running these narrative stories about like maybe there's going to be 2 cuts, and then the dot plot says 1 cut, and then employment says this and this and this. But what they're really doing is they have this $2.2 trillion pile of slush that they pushed into the economy to fluff things up, and they quarantined this in the repo facility, and now they're pulling this back out. They're down in like the 400 billion range or something, and it doesn't need to go to zero, but like pretty close to zero. And you can, now they're trimming back the pace, and they're really trying to finesse this thing. They're trying to manage this system. And if you notice, we don't really have recessions anymore. We have grocery costs going up, by dramatic leaps. We have people are very confused because I'm having an AC system put in. The guy was telling me that private equity, he's like, he saw at the office, he saw my Bloomberg stuff. He goes, can I ask you a question? I got this private equity guy trying to buy my company for $1.5 million. I think I should sell it. I'm like, don't do that. Because basically it's like you look at the system, it's highly financialized, it's highly leveraged, and it's a bunch of very confused people that want all these different things, which you would never want in a market economy. You would never say, I really hope there's a lot of people that become unemployed so I can get more Fed money. It's just crazy. And so the game is to try to get your head out of the news and realize like they're going to run this thing down. Now, what is that going to look like? Well, all the stocks in the U.S. are worth like $55 trillion at the moment. And that's about the value of all the stock markets together, and then the debt's like 35 trillion or something. Now, all these numbers are going to go up in the long run. So like you're spending like $1.6 trillion more than you get in tax revenue, and tax revenue is kind of down. I mean, people are not making that much money in the market. So think about it. The Fed wants you to make money in the market because once you pay tax, the more tax you pay, the more borrowing capacity the economy has. Like, so numbers go up. I mean, everybody that's like, oh, there's going to be a crash. I mean, yes, but the thing about a crash is that it's more of like a panic. And so you're not going to have like a 2-year bear market. You're going to have these abrupt events that then are responded with by like emergency measures, keep you very confused, and they amount to like yield curve control, but named something different. Okay, so what do you do if you're an average person? Well, the first thing to do is stop kidding yourself. I mean, stop reading news headlines and stop believing what these people in fancy cufflinks and stuff are telling you, like these economists. It's totally ridiculous. I mean, these numbers are going to go up, and you have to position yourself to not get killed on the panics and to benefit on the rise in the long term. And it's not really that hard once you see it for what it is. This is definitely like something you can do. It's a managed system. It's not a free market economy. It's a managed system.
Okay, so then what does that look like for 2024? I mean, here we are, as you talked about, all these narrative type discussions, maybe 2 Fed cuts before the end of the year, that type of narrative. Where are we? I mean, are we just going to keep issuing debt?
No, so it's really complicated because if you think about it, the rise in the short-term rates is higher than the actual borrowing rates, like in the middle of the curve. So like you've got like, the 4-week bill is significantly more expensive for the Treasury than like the 10-year. It's very strange. And it's been this way for a long time. And you have these people saying that's an inversion, it means a recession, but it actually does not mean that because that's a market system. So you're thinking about a market system. It's not a market system. So the Treasury and the Fed are making all these moves right now where it seems to me that they're trying to set up for this yield control, like yield curve control, but called something different. Like they'll come up with like an acronym for it that what it basically does is allows them to control the middle of the yield curve so that they can control the cost of the Treasury for continuing to spend more than it takes in tax revenue, which is important because the economy has to keep growing or else it collapses under this pile of debt. And I actually think they'll be successful because so far they have pulled off the impossible for 25 years, and I'm going to bet on the trend. And the trend is that they'll find a way to confuse people to the point where they can keep this debt-based system growing. 320 trillion worth of debt in the world, probably in my lifetime, goes to 500 trillion. Gold price is 23.20 or something, and all the gold bugs are like, it's manipulated. Well, you know what? If they manipulate the price of Audis, I'll buy like 6 of them. Okay, so I mean, the thing is that you're crazy not to have a little bit of gold, and it's like you should be hoping for manipulation because if other assets like your some of these like fluffy stocks, I mean, 55 trillion in market value. Let me tell you, that's really high because if people started selling, that would come down drastically. Like that would come down like in an emergency. I don't know if you have any kids, but like you have these bounce houses. You ever seen these things? They have like a fan that blows in the bounce house. Now, if you turn the fan off for like 10 seconds, the thing caves in. So because it has constant pressure. And so for the US system, the constant pressure is access to more debt. And what I think people need to realize is stop thinking that there's going to be some market style event that is going to be like a free market style event. This is not a free market. This is a managed system. There are people that make massive amounts of money by having a seat at the control center of the US system. I highly doubt they're going to give up their seat to someone like you. Okay, forget about it. So probably what happens is a panic event is used to usher in the next round of this type of thing, and the numbers go higher. Position for that. Now, if you have a stock that's like a fluffy tech stock that's massively up and all this, I mean, you got to ask yourself, like how big can this really get? I mean, like Nvidia is bigger than most of the entire gold industry. It's like, yeah, I mean, okay, it's sensible because if you watch an Nvidia presentation and you watch a gold presentation, one of them is significantly more exciting than the other. But the thing is that what happens if people start pulling money? This Americans hoard. Okay, so like this is a huge culture of hoarding. So what you do is you hoard all this paper. And I've seen this. I've been on corporate, I don't know if you know this, but I'm not on any corporate boards. People seem very confused by that. But I have been on boards in the past. I've seen this hoarding. They hoard stock options. They hoard, it's paper. It's all paper. And they hoard money. And so most people are hoarding this huge sum of money. And they would never think of selling a little bit, right? So like if we get into a panic, they'll think about selling a lot. And then they go to sell and there's no market there. Okay, so if you're someone that's like hoarding a gigantic pile of paper, I mean, every now and then it's helpful to make it a little bit real. Like I'm a huge advocate for spending money. I think people in the U.S. they have like a disease with this. I mean, they put off joy for a long time. With this gigantic pile, and I'm like, the pile is a huge financialized. Like, if you put a deposit down a Vancouver condo and the demand for the building is high, you can flip the contract. Okay. So it's kind of like, as long as there's a buyer there, then you can always do that. Once there's no buyer there, then the contract in the condo is a liability. It's not even an asset anymore. And so my point is that when you start thinking about how do you position, it's not to make the biggest pile of paper in the world. It's to live a life that you think is cool. Okay. And if you start thinking about it like that, you think, I know they're going to run this system higher. Okay, they're going to run these numbers up. Like there's going to be a time in my life when gold's 5,000. Okay, that's a big number for gold, right? There's going to be a time in my life when the federal debt is $70 trillion. It's 35 right now. 8 years ago, it was like 17, and I said it would double, and people said that can't happen. Believe me, it can happen, and it will happen. And so,
but who's holding all this? What do we do with it?
Well, I mean,
like at the end of the day, if we're going to keep,
but the goal. Okay, so I'll tell you what the goal is. The goal is to slowly erode the value. So if you slowly erode the value, you keep the bounce house filled up, and everything works. And a couple little pieces break off, and nobody cares because it's 2-3% a year of your spending power. But the problem is that when too much too fast happens, and you go to the store and apples are $6, this is a huge problem. People start asking way too many questions. You got to keep these people confused, and it's not that hard to do. So when you have all this buying, a lot of times the big component of buying for treasuries outside of the federal self-dealing, which is like retirement funds and stuff buying into these like trust accounts, but a lot of the buying is like massive insurance companies, okay, where they match long-term liabilities with long-term debt instruments. Okay, that puts a lot of. Now, what happens if the economy is so on the rocks that people aren't putting more money into these companies? They become insolvent, and then you have a panic. Do you see how complicated this is? It's an orchestra. And what we decided 20 years ago was we don't want to have a free market anymore. It's too complicated, because in the free market, the individual people have too much control. What we want is a managed system that people think is a free market. That's what's happening. When you see it from that lens, it makes a lot more sense. And you stop standing around saying, surely it's going to crash, and start saying, well, how do I play this? It's a game. So if it's a game, it's like, how do I play this game and not get my arm chopped off and live a life? That's what I want to do. Is I want to live. That's my goal.
Right. So how are you playing the game then, EB? Are you taking healthy profits right now? Or are you waiting for this cyclical approach? Maybe we're going to see.
Taken some money off the table in the last 6 months, and I'm a pretty moderate. I think I'm a really good seller in life. I mean, I think when I look back at this, I wrote in the newsletter that you just read today, came out today, about one of the best sales I ever had. And I'm not like an extreme jumpy seller. I mean, when I decide something's not right, I mean, I step out of things fairly, like a little quietly. Like I'm famous, for like the person that I leave parties without. I make sure to see the host, and then I like disappear. So nobody ever notices. And the thing is that that's how I sell a stock too. Is that if I start feeling odd about something, I'll change my weighting, and I'll change it in a way that's not like abrupt. And so my exposure to things has changed. I mean, one of the things is that the mining stocks have not performed. I took a guy to see a mine in September, and we had this long conversation, and I was like, look, I mean, you got to be really realistic here, that like, if you're going to make a bet on these stocks, you have to be willing to make that bet for a long time. And I mean, a long time might be 10 years. And, oh no, that's crazy. It's any day now. Okay, well, maybe you might be right. And at some point there is some value here. But the thing is, private equity is buying my air conditioning guy's business, for like 15 times EBITDA, and the mining stocks are trading for 2 times EBITDA. Okay, so what's wrong with that picture? The mining stocks are not able to articulate to the market a reason to buy them. And that's a huge problem. And you go to a mining conference, and these people are like from the 80s. They're totally unaware of market forces, and they are unable to articulate a story that is believable to the mass audience. $55 trillion of market cap, none of it's coming into the mining business. I mean, there's a few like historic dinosaurs at the conference, and that's it. These people are very confused, and they're losing a lot of money, and they seem happy to lose a lot of money. But for myself, I think that it's a compelling industry, but it doesn't deserve the weighting. Like once it breaks out, okay, then you add to it. Do you understand how this goes? It's like once it earns your money, then you add to it. Or you look at Agnico. Agnico earns your money because Agnico's strategy is proven to be very effective. Okay. So when you have an operator, a management team that's an operator that's clearly on top of things, you reward them with your vote and you reward them with your dollars. But when you have people that just give you like some platitudes or something and just say it's a tough market and the stock's down 30%, you vote against those people and you take your dollars away while you can. And you have to think this way, because otherwise you sit in a trade for 10 years and nothing happens. And that's a huge problem.
That's happened for a lot of folks. I mean, I read your latest letter. Let's get back to that a little bit, because you emphasize the importance of attending shareholders meetings. When we think about corporate governance and we start to think about G&A costs and all the things that you're kind of talking about here, how important is that? Are you investing in just the management here?
Okay, so the management is the only thing that's unique to the company. So like if you, in any industry, if you're an insurance company, wherever you are, you commodity cost and interest rates and economic factors are the same for every company. What differentiates the company is the management team. And the management team decides what the strategy is and then how they're going to put that forward. Now, most of these management teams, when you meet them, they spend most of their time protecting themselves in internal political games and figuring out a way to manipulate the board to make more money. So people need to understand that the way this works is that if you own one share of stock, you own the company, and you get to vote on who is the director. And believe me, I mean, in the past, I've been on boards, and they're very concerned about voting. If you vote against a director, it's a red flag for the larger holders of the stock. Are like, wow, a lot of people voted against this person, and we're concerned now. And if the stock is down 40% and the directors get paid way too much money and the executives get paid way too much money and the sales are not growing as fast as the peers, then why would you continue rewarding them with your vote? And people say, well, I don't have enough money that it matters. It does matter. And I explain in the letter that someone that I respected a lot taught me that if you want to make money in the long term, you have to get your philosophy right. And the way you do that is you're an owner of this business and you act like it. That means if you want to have 10 shares of stock, you better vote that proxy and you better pay attention. And if you don't want to do that, then get a savings account, because buying stocks is not a sweepstakes. It's not a raffle. It's not like paying $2 to maybe win something at a casino. That's not what it is. It's owning a business, and it's owning a business that you don't show up to, which I think is cool. And I've always thought that was cool. And that's the way I approach the newsletter, is that we own businesses that we're really proud to be owners of that business. And we think that economic forces are pushing them in the right direction. And so we want to be exposed to that. But what we don't do is buy things and then watch them go down and then hope that they get better. And I go to a lot of shareholder meetings and people say, well, why would you waste your time? I agree. It is maybe a waste of time because it's not like I have a material stake in these companies. But I learn a lot at these meetings. I mean, by shaking hands with the executives, by seeing who else is at the meeting, by looking at the office space that they choose to put the meeting in, by watching how they treat people, I can tell a lot about what's going on in the company. And oftentimes you're with people at the meeting that tell you other interesting things or other things you wouldn't otherwise learn. And so I do this and I report about it in the letter. I do a lot of things in the letter, but I've done this for about 20 years. And I think when people understand why I've done it, all these things are coming in the mail to you right now. You're getting you're getting all these big packages of paper and you just throw them away like they're not junk mail. This is like, it's absolutely critical if you buy stock that you pay attention to this stuff, because if you don't, then you really shouldn't own stock. Yeah. I mean, seriously, like you should own an apartment or something and rent it out to someone, like do something you're going to control. I mean, you would never own an apartment and never check on the electrical and the plumbing and the air filter and all this stuff. I mean, that's being an owner. So with stocks, it's like, yeah, let me look at the stock chart. I mean, if it's straight down and the other companies are straight up and management gave themselves a huge pay raise, I'm going to fire these people.
Yeah.
It takes you know what I do too, just so people know. I have my kids I have given them some stock, like, in companies that I think they find interesting, like Caterpillar, for example, because kids love bulldozers and stuff, and I love bulldozers. So I mean, so we vote the proxy. Now, it's really, really funny because I have a son and a daughter, so they vote along gender lines. It's very, very funny to watch this because it's totally against political correctness, but I'll let them vote separately. I'll show them the proxy with the pictures of the people, and I'll read about the people. I'll say, well, this lady is the president of Berkeley College. Now, she doesn't know much about tractors, but she is on the board of this tractor company. What do you think? And my son will, I don't think so. I mean, and so we vote.
Getting them started young.
Yeah, I mean, and I tell them, like, I don't care what you do for work. I mean, you go be an artist. What I do is like a total racket, So I mean, it's like do something much more fun, like be a tennis player or something. But the thing is that to me, it's like, yeah, I'm going to teach you what someone taught me, which is like if you work all day, you're trying to make more money so that you can have a better life. Okay, so if you're going to do this, then you need to be involved. And it's like, this is how I want you to think. I want you to think about your dad gave you some money, you own something, and now you got to be a real owner. You can't just be like some absentee owner that expects everything to go great. That doesn't work that way.
No passive investing. Be a little bit more of an activist, I guess, is what you're saying there. Hey, EB, I want to ask you quickly because I could always talk to you for hours, but your investment philosophy has weathered so many various economic cycles. And as we potentially enter a period of weird economic uncertainty here, as we keep talking about, how are you adapting to maintain robust growth? More specifically, the audience wants to know where you're putting your money, man.
Yeah, so in the newsletter, I talk about some of the shifts. We talked about some of the stocks I'm selling, generally speaking. And what am I doing with that money? Well, in addition to living my life, which I think is a huge priority, I've been investing in a certain type of real estate deals, I've got a guy that runs these trailer deals for me. I put his information in the newsletter. I'm super happy with it. I mean, I do things like that. I'm not endorsing this guy. What I'm saying to people is that I meet people occasionally that I think that guy's interesting. I mean, the whole reason I got involved in public companies was I met a guy, maybe 8 or 9 years ago, who had an idea, and I thought it was a good idea, and so I got behind his idea and helped him do some things in the public markets and all this stuff. But my point is that I'm always meeting these people, and I'm interested in meeting people even that I don't do deals with. But in this year, I bought, in the last 12 months, I bought significantly more gold. I bought Bitcoin. I bought some trailer park investments, and I just trimmed up my exposure to other equities. I trimmed that. Now, one of the stocks that I bought, which I wrote about in the letter, has grown 20% a year for the last 20 years. And I'm just like totally enamored with the stock. I'm about to go meet the family that controls the company. They control it through the B shares. They have A and B shares of stock. They control the B shares, which have 10 times voting power. To me, this is like a private business. And so I've bought a lot of that stock.
But you got to give me the name.
It's in the letter. It's in the letter. It's only fair to the readers. Yeah. But I mean, the thing is that I'm interested in these types of businesses because there's a market cap. I think right now the thing is like 2 or 3 billion to 20 billion is this area where you, as an investor, you can really find amazing value because it's too big to be like a penny stock, situation, and it's too small to fit into our massive capital market thing. And it's also too big for private equity to buy. It's like private equity is not going to really buy a $10 billion company. It's unlikely. And so that's where I'm spending a lot of my time is in this little zone. So I don't really want to own things that are like massive. And I don't really want to own things that are small because there's too much execution risk by these like greedy people that barricade themselves into these little companies so they can just use them as their like, feeding trough. So that range is really good. I found that there's some forgotten companies in there, and I'll go meet them.
Yeah.
And let me tell you, just real quick, everybody thinks it's like I must be able to meet these people because I'm some notable personality. Maybe, but a lot of times I just call them up. I mean, like I met with a guy in New York that's done all this brain research last week, and I just called the guy up. I was like, introduce myself. He looks me up online. Okay, I'll meet with you. So I met the guy for an hour to discuss like all this research that he did, and we had this great meeting. And so my point is that like if you really dig into these things, I mean, people will give you time, especially if you've studied their work. I mean, if you call a company and you're like, hey, I own a few shares. I'd like to come to the meeting. I'd like to vote my stock at the meeting. I appreciate the fact that you've grown the company 20% a year for 20 years and you deserve my support. People are like, yeah, come on over. I mean, you could talk to the CEO. He'll be there. So I don't know. I've always thought this was fun. And the newsletter is a cool way to, it's a cool way to share. I mean, I understand you might be at the office all day. You can't do this, what I do. Okay, fine. But, I write it as you know, in the newsletter, and it's like, I'm just telling you everything that I do. I mean, it's not like if you read the newsletter for 2 years, you don't need me anymore. That's the point. Is that I pretty much told you everything that I do.
Hey, AB, quickly before I let you go here, you talked a little bit about increasing your stake in gold. Was that physical gold, or are you talking gold equities here?
Physical gold. Yeah.
Okay.
Yeah. I mean, look, I especially like last summer and into the early fall, I was shocked because what happened was the dealers were telling me that people were selling. I mean, they're still selling. Like the dealers are telling me that, and I'm sure, Kitco would know this better than anybody, but the dealers tell me that they're getting 4 or 5 calls to sell for every 1 call to buy. Yeah. So, I mean, I just was like, that's crazy. I mean, that must be people that own the gold for 10 years and they've had enough and they're getting rid of it. And so, I picked up, some kilo bars and stuff. I just feel like the gold is so cool. I mean, it's like, obviously I was buying like I've told people in my book back in like 2004, I was buying like 1 ounce a month. Right. I just was like, it was like $400 or something like that. I mean, I thought that St. Gallen coins were really cool, and you're not going to be surprised I wasn't in a relationship then because they're actually not that cool, but I thought they were cool. And I was like hunting these coins in stores and stuff. I thought it was great. And so I bought one every month and made like a game out of it. And I just always did that. That's how I got into the gold business. So my point is that like, I'm just adding some gold, but I thought it was like super cheap. I mean, I was like, the premiums are really low. I mean, like even right now, I haven't checked this week, but last week, I was looking at some Eagles and I couldn't believe the premium is so low that like, I think people are sometimes selling them in below spot. It's really wild. And so that is interesting. I mean, I think you got to be careful though. You don't want to get too much gold. Like the problem with gold is that it really is out of the system. Okay. So like, I think, I'm not as young as I look, but I'm also not, like ready to stop working. So, I mean, you have to be careful because if you have some massive allocation to gold, that money is outside of your ability to keep doing things. And you might need to start a business. You might need to do something for your and you don't want to be like lugging your kilo bars or 100-ounce Comex bars down to the dealer to like trade it in to do trivial things. So I think I say this in my first book. I'm writing another book, by the way. We didn't really talk about that, but I talk about what percentage is right, and it's a lot less than you think. I mean, if everybody in the country bought 1% of their assets in gold, there would be like a panic. So there'd be like no gold. So I mean, just like the tiniest bit of gold goes a long way. And most people have zero. They don't know where to get it. They have no idea what's going on. And so if you have zero, I mean, and you're watching, gold news, you might want to get a coin. I mean, it's like, what's the worst that can happen? You can just sell it later if you want. It's not. You can always sell a gold coin.
Costco even sells them now too. So where there are lots of places
they sell pamp bars. Yeah, they sell pamp bars. But I mean, pamp bars are not that cool. I mean, it's just like a lump of gold. It's not. I mean, it's fine. But I bought some 100 gram bars. Like it turns, they're just not that cool. It's like
just a little too small.
The coins are cool
you,
because. I think coins are cool because I mean they have like funky designs and history and and you get like a tube of them and I don't know, why not? Why not? People buy a lot of they buy much crazier things in America.
They do. And as you said, my friend, maybe 5,000 in your lifetime to gold. That's what we're hoping for. Hey, I appreciate your time today.
Yeah. I look forward to seeing you this summer, maybe.
Yeah, looking forward to that. Thank you, man. E.B. Tucker, editor of the Tucker Letter, joining us today from beautiful Florida. Thanks, man. I appreciate your time, as always. We'll see you next time. I'm Jeremy Szafron for all of us here at Kitco News. Thanks for tuning in. Don't forget to hit those comments up, and we'll see you next time.